You mentioned the energy crisis, climate crisis, COVID crisis, refugee crisis, monetary crisis, China crisis, which is a big one we'll get to later, the bond crisis, labor crisis, transport supply chain crisis, hello, happening right now, and what you call the 800-pound gorilla. Do you want to say it?
Yeah, it's what I call the superinflation crisis. Don't talk about hyperinflation. You know, hyperinflation is very rare. We shouldn't use that word too much, although the CEO of Twitter warned for hyperinflation. But I think let's call it superinflation, you know, inflation of 10% or more. And then because of this superinflation, we get a food crisis as well. You know, this is very scary. Next, we'll have a food crisis because food is connected to energy. And we had the CEO of a large Norwegian company, a food company, or actually they produce fertilizers. And they warned that to produce fertilizers, which we need to grow food, the cost price of making this fertilizer, especially ammoniac, has grown by tenfold. It used to be $100 for one amount of fertilizer to produce, and now it's $1,000. So he's warning about a food crisis, which will be next. And you know, China has been advising over 1 billion people to stock up food supplies. That's weird. That's scary.
The supply chain crisis is real. But bringing it back to your point about inflation, the Fed can't even hide it now. We had Fed Vice Chair Clarita coming out earlier this week saying, look, another year of inflation like this would not be a policy success. How concerned are they about the inflationary trap right now, Willem?
I think they feel trapped, and they are trapped. And one of the best signs of that was a tweet by a Dutch former central banker. And his name is Lex Hoogduin. I know him well. I interviewed him many times. I met him many times. And he tweeted last month that the ECB is trapped. And he's a former central banker. He's been running around in those circles for decades. And when the ECB is trapped, and of course they are, because they can't lower or they can't raise interest rates, what they would need to do to conquer the inflation, to combat the inflation. But they can't raise interest rates because there's so much debt out there. So, and when the ECB is trapped, the Fed is trapped as well, and the Bank of they're all trapped now, and they understand. And what's very telling, that the Bundesbank president, the German central bank president, he's leaving. We had the news yesterday. One of the New York Fed governors is leaving. So that's very telling. You know, it's getting scary. You know, we talked about this for years. I warned our audience for 20 years that one day we'll reach the point that you can't ignore this any longer. Mm-hmm. You know, this was laughed about, and now we're here. You can't ignore it any longer. I meet rich people every day. This morning, I met a guy. He sold his company, 40 million in cash. He doesn't know what to do
because he sees the warning signs. He wants to cash out early.
He wanted to sell the companies to be flexible, but now he has a bank account with 40 million in cash.
Right. And that's something you said you're seeing a lot. People not wanting to get rid of their cash almost, and that's why alternative assets like gold, silver, and the cryptos have
everything. We were talking this morning about buying old historic cars or old paintings or whatever. You know, he needs to invest that cash, but he's already loaded on real estate. So real estate for many people, you know, they already have a lot of real estate. The cash is not an option. Bonds are not an option anymore. It's a guaranteed loss. So where can you go? You can only go to the stock market, but that's very rich valued. So we were discussing, what can you do with 40 million cash and still buy things which aren't that expensive? And then, of course, I was talking about commodities being at a 100-year low still. Many commodity companies are still valued at a 100-year low or near a 100-year low. The price earnings of commodity companies, gold miners, it is around between 5 and 15 compared to tech companies. When a tech company is trading at a PE, price earnings ratio of 25, we say it's cheap. I can give you examples of gold producers who have a price earnings ratio of 5. So there's still value to be found.
One of these quotes that you've said, when stocks keep rising, the smart people understand the value of money is declining, but the masses still don't get it.
We're not getting richer. It means the money is getting, we're losing the purchasing power of money. It's the debasement of currency. It's a huge warning sign that money is dying.
When you speak of superinflation, what's the definition for you, Willem? It's inflation running at what rate?
At over 10% a year, but not the official inflation. The official inflation will show 4 or 5%. But as you might know, you have this guy of shadowstats.com. He's an old economist, and he's using the old model to calculate the inflation, the model from the 1980s, the official model. And when he uses this 1980 inflation model, he finds out that inflation with you guys in the US is 11, 12, 13% a year. So I think, look at the groceries. look what happens with cars. You see it everywhere, prices going up. Look what happens with stocks and real estate prices. They go up over 10, 15% every year. So that's what I call superinflation.